Everyone. This is Brad Matheny. Today is Friday, the 21st of February, and this is where we should be potentially getting a breakdown in the markets based on my extended cycle patterns. We go ahead and show you that real quick before we get into things. So, way back over here, shown them to you many times in the past, but we should be moving into a breakdown cycle pattern if my analysis is correct, potentially indicating a weaker market trend to the downside, pulling into a basing bottoming pattern back over here around the 21st of this month, which is today. So the way I look at this with this bottom pattern into weakness, then we shift into some moderate strength, moving into a major bottom again here around the 30 or 21st of March. So this secondary bottom here could be a breakdown setting up, a moderate breakdown setting up in the markets. We're already seeing some of that happen in the YM. I'll show you that here in a minute. Now, yesterday's activity in the SPY here was very clear rejection to the downside. Okay, you can see here that we've had this big rolling trend here yesterday, clearly breaking below the 609.35 level. It's important to understand that, at these new, kind of all time highs over here, if we get rejection, it's going to show up fairly quickly today or yesterday. And it does look like we've seen a fairly strong downward rejection here. We need to see how this plays out. This is not any type of a new trigger. It is a new low. We didn't close below this low. So if we were to go back to our Fibonacci price theory level, we have a line here, which is a standout low off of this low right here, a little bit lower. Oh, right in that area. And we have a new low. You can see that we've rolled down below this low right here, indicating that short term we could potentially be moving into bearish trending. So at this point, this new low establishes a new low price downward cycle trend. So we would be into short term potential bearish trending, intermediate term bullish trending, and long term bullish trending right now. And that's a fairly solid understanding of Fibonacci. When we get this new low, it warns us of a potential downward price trend. And now what we're looking for is a close below that level to confirm it. So essentially, this is potential bearish, meaning that we have an indication that price may be trying to break downward, but we would be looking for a close below that level. So at this point, we're going to be watching to see what happens, to see if we get a close below this level. The current cycle pattern is a top resistance in counter trending mode. Now, a top resistance in counter trending mode would be the opposite of a top. So a top pattern typically is to come up, try to find resistance, and roll downward. That's what a top looks like, kind of a spiky upward inverted V. Whereas an inverted top pattern means we come down, try to find support, and then roll back to the upside. So we would be looking at kind of a rolling down type of price activity today, trying to find some support, and obviously support down in the 600 or lower level would become, very critical. If you take a look here at where we're at, you can see that we have some serious support level really right down in this 596, 597 area, and then back down here in this 584 to 590 area. Do I think we could hit that level today? I don't think the markets will come down that hard, but um, we need to see how this plays out because the breakdown that I'm telling you that is setting up around the 21st, typically has a 3 to 5 kind of day window. So you could see a rollover like this into the 23rd, 24th over the next couple of days, maybe setting up this major bottom type of pattern. So pay attention. We may get some downward trending carrying into Monday, Tuesday, Wednesday of next week. Okay. Okay, let's come over here, take a look at the QQQ. Same type of setup, guys. We're going to be moving into that sideways type of downward trending. You can see I tried to draw it yesterday. Get rid of some of these. There's our rollover. We have now a new low. We do not have a standout low here. Remember, a standout low is a fractal formation where we get a breakdown, whoops, like this. This is a perfect type of a fractal formation. So this becomes our standout low right here. That low becomes our standout low if it hasn't got the low price hasn't been touched in the last, call it, 10 to 15 bars. So now there are instances where you don't get these perfect ones, and say, for example, this one is not here and this one is not here. That's still a valid standout low. Okay. In fact, this is a valid standout low. Even if these two were to be exactly the same low price, and this were to form, that would be a standout low. It's just a tweezers type of a standout low. So now what we're looking for over here is, do we have a standout low over here, a lower low? And we do not. The lowest low that we have is back down over here. This is our lowest low price. This is a new low low, and it would confirm with a higher low potentially today. So when we come down here and we take a look, we have this low and this low, pretty much the same lows carrying forward. We have this low back over here, which is a secondary low. This is another standout low right here. And if we were to get rejection, which it looks like we've got up here on the Qs, we would be looking for the Qs to move down to this level, which is our next level of support based on these standout lows. You can see we've got standout highs here. So I'll draw these. Looks like almost a tweezer pattern, but I'll draw it here and I'll draw it here. Again, when the lows happen, or highs happen in very close range, I tend to call them tweezers, like this. This is a tweezer type setup where you've got almost exactly the same support and resistance levels. So for the Qs here, a breakdown below 531, almost 532 would not be uncommon, with a potential target down here at 522. Given we're up at 539, that would potentially be a breakdown of 2.8% to maybe 4.9% if we get a deeper breakdown down into this 511 area. But you can see we really don't have any major support until here, here, and maybe all the way back down here. So if we were to move decidedly downward, this would be a pretty solid breakdown move. Okay. I mean, really, it doesn't have any real solid flooring underneath this move. And that's what I've been warning all of you, is as we move up this channel, if we get a big solid breakdown, we could see a gap like this. It's not uncommon that we could see a big gap like this taking place over here and having the market go from 537 to 516, 517 in a massive gap because of news. Maybe next Monday, who knows? So it's not uncommon to see these big gaps when we get unusual news and craziness. So now while we're here, let's take a look at the ES. As I took a look at this earlier this morning, the ES is rolling back downward. I don't have my Fibonacci price theory lines on here. You can use your eyeballs. You can see a standout low here, standout low here, standout low here, standout low here, standout low back over here, which almost confirms with this. And then we have the last standout low down here. So, we have really kind of this level and this level, and then we have a standout low up here. Now, remember, this is daily. So, daily provides more intraday type or more swing trading type of setup. So, we've got to kind of watch this 611, well, I'll call it 6118 level, a little higher, 6119 as a breakdown level right now. We're not close to that. So we're technically still bullish, but we've rejected off of these highs. Now, this unique high or comparatively ultimate, yeah, that is an ultimate high, hasn't been touched. And now this new ultimate high are very close to one another. So theoretically, this is the same type of setup like right here, where we could easily get a pullback down. 3.5, 4.5% from this level. We could watch the SPY drop down into the 58.99, 5900 level very quickly. Okay. So we come over and take a look at the NQ. Still has not gotten above this ultimate high level, indicating that we do not have that longer term bullish trending. We are above the standout and unique high levels. Here's a basically a standout. It looks like I'd have to do the count: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Definitely standout. 15, 16, 17. Uh, yeah, I could call this a unique. Um, so this is a unique. This is our ultimate. So we are looking at, continuing breakout to the upside here. And if I were to label this like I did the others, I would label it as Fibonacci. So we would call it standout is bullish, unique is bullish, and ultimate would be bullish neutral. And where are we with this? So why am I labeling this bullish neutral? Okay, is that we have rallied up into this ultimate high price level. And we come back over here and set up a unique low, which we have not broken yet. So this is a very big, unique low. We have failed to move off of this channel, and we're in this excess phase peak pattern, potentially rolling downward. So generally, the last ultimate high or the last ultimate level we reached is an ultimate high. We have yet to really hit an ultimate high, a new ultimate high. I can count this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 27, 28, 29. Okay, so I mean, look, this is an ultimate high right here. Um, this is a new ultimate high. This is going to become our current ultimate high level. We still have this previous ultimate high up here, the red line. And the reason this becomes an ultimate high is this is a new higher high that has not been touched in 25 to 30 bars. So, again, this level becomes our new breakaway type of a level to the upside, trying to qualify an upward trend. We have essentially failed. We've gotten up to this level, we've set it, we've not broken above it. We'll see how we do earlier today at the open, see if we get above it. But essentially, in order to move back into cleared bullish trending, we'd have to clear both of these to the upside. Okay. And like I said, we're rolling through this apex, this flagging apex. You can see it here, which means we're going to have this volatility. And as you can see, the way I counted it is we had an A, B, C, D, E potential up move, which failed, rolled into an A, B, well, here, A, B, C, D potential E, which means this could be flag volatility. So we are above this previous unique or standout high here, giving us some moderate bullish trending. And now we've got to watch this low here, which could be our downward cycle breakdown type level. So again, we're cautious. We're bullish, but generally cautious. Okay. Now save this and let's go into the YM. The reason I'm showing you this is because of this. Okay. The YM daily has broken down quite hard. Okay. It's down 226 right now. It's breaking down quite hard. The YM is think of it as the Dow 30, which is what it is. We've rolled into this cycle pattern. Now, I don't have, lines drawn on this, but I can easily draw the ultimate high level here, which then qualified with a secondary high level back here, almost a tweezer type of pattern. We have our ultimate type of low down here, which I would mark a slight green. And as you can see, we roll through this. We have a number of intermediate and standouts right over here. These are more intermediate term highs and lows. We have a couple of unique standouts right here coming through. So we got those. Really don't have anything there. Really don't have anything there. We got a couple of standouts right across here. And we have a high price here. And we have a high price here. And we have a high price up here. So now I've kind of just gutted this for you in Fibonacci price theory, teaching you how to visually see a chart. Of course, we have this one. Yes, I missed it right there. So given where we're at to the downside, you can see that the most recent breakdown occurred right here below these levels, potentially breaking down below this 44,000, call it 15 level. If we get down below this level, this is a very clean breakdown. So remember, we would be looking at Fibonacci price theory. We would have standout, would be bearish. We would have unique, would be bullish, neutral, and we would have ultimate would be bullish. So now, why is this important? Because you need to understand that standout. Helps if I can find my D, huh? Being bearish gives us a pretty solid indication that we've got short-term bearish trending taking place. So understand that this standout being bearish means we're starting to break the new lows. When we start to break the new lows like this, you need to understand that this type of rotation is now breaking down potentially. Remember, price always is going to attempt to establish new highs or new lows. So when it breaks down, we're establishing new lows. That means that if this continues, we will likely continue to see new lows established breaking downward. And once we get down here with the below this 44.15, 44.14 level, the next low price level that we're going to come down to is right down here. Okay. And that means we're going to have a pretty solid potential drop in price as this is setting up, almost a 5% drop in price. We've rejected back up here near this ultimate high level. We got to new highs. We got no closing price confirmation. And remember, I like to use closing price confirmation, as a pretty good indicator. So, for example, here's a new high with the close above the level, very solid confirmation right here. Here's a new high with a close below it. I'd like to see a close above it. We get above it. Okay, good solid confirmation. Same thing here. Got a low down here. We came down. We got below it. Low. Okay, moderate confirmation. It's not quite exactly what I'm looking for. Close below it. Very solid confirmation. So this move today here, this breakdown move right here, is going to either be our confirmation or not to the downside. And that would mean that I would expect a pretty big downward move early next week off of some news. Okay, so gone through the data with you. Going to keep doing this with you. Let's go over here and take a look at gold and silver. So gold, I'm not going to be able to do this on every chart right now, but let's go ahead and take a look at where we're at. Let's draw some lines. You can see this nice tweezer pattern across gold. You can see the most recent low down here. This is looks like a unique low about 20 bars back. We can see this low price was tagged again. It's exactly pretty much the same area. So as far as silver goes, we've got pretty solid support right here. We are in a downward trend because we're establishing new lows as we go down. We are looking right now at rotation, and I would say that this 33, 43 area is going to be our next target to the upside. Now, I think gold and silver are really in a rally mode. So, unless something breaks today, I think gold and silver are really going to try to rally to the upside. I talk to you guys about this all the time. So gold sets up a low back over here, sets up a new low back over here. This is very clear rejection, in my opinion, right here. We have a high price level over here, which is a very clean standout high. We have current high, standout high here. Remember, it requires one or two on the right as well. You can't just look at the newest high or low price and say, hey, that's a standout high. Yeah, we don't know yet. It's got to have a lower high over here on the right. So we'll see if this plays out as a standout high. Prior to that, we've got a standout high back here. And as you can see, we are, shifting into an uptrend. So this is hourly. We've come down, hit this low. Let me do that again. We've come down, hit this low, rolled up to this high, rolled down to this low, and now we're trying to move higher. So what you're having with this higher high, higher low rotation is you're trying to move into an uptrend. That's a pretty solid move into an uptrend. And again, you can pay attention to these types of rolls as well. Rolling into a downtrend to the downside means you're going to see these same types of rolls. Okay. So where we're at with gold right now, I would be watching gold to get above 29.48, maybe 29.50. And then we could be off to the races, and our next target would be 29.60. If we were to look at this and try to determine upside targets, you can see this rolling cycle pattern. Again, if you take a look at this from a standpoint of rolling, this is kind of potentially where we're at rolling upward in gold, and same type of setup here in silver, rolling upward, setting up higher lows, higher highs, as far as the rolling price pattern. So again, we would be looking at silver moving up to 34.25, and we'd be looking for gold to really potentially try to move up to this 3,000 level. I mean, it's really wants to get right up into this 3,000 2990 3120 or 3020 area. So that's, that's in my opinion, that's the target. I think gold is making a good solid move here. Just going to be a matter of time unless the markets really collapse. All right, let's go back over here and take a look at Bitcoin. Bitcoin had a nice little rally off of these lows. As I mentioned, we could be moving into this kind of an excess phase peak pattern here. We are stalling a bit right now. I mean, I would have expected it to be a little bit stronger. Still was up 2 grand, I think, yesterday. We have spread this out. Well, technically, this is today. And technically, we are, if you look at this, we're trying to break above this standout high right here. We've kind of maybe closed above this high. We'll have to see how it ends up today, where it ends today. But this is an attempted bullish breakout. Um, we've got the rejection back down here. We're moving higher. We have a new high already right here, higher than this high back here. So we're looking at a pretty, solid potential move up like this, maybe into this channel. So we need to see how this plays out today, to see if Bitcoin does actually rally and see what happens with the market. Now I'm sitting here, and again, I'm looking at, if you take a look at the Dow compared to the NQ and the YM, or the NQ and the ES, something's going on related to Dow inefficiency in the market. And I think we're at a very volatile time in the market, but I would urge you to stay aware of the chance that Bitcoin could attempt to make a rally up into this 102 area, maybe even higher over the next 10, 15 days, rallying up into this channel. So, I drew this yesterday. I'll draw it again, but we have this excess phase peak pattern kind of setting up here off of this low. We come up, we come down into this low, we come rally potentially out of it, maybe into this manner. And there is our new excess phase peak pattern rolling into that sideways mode off of this consolidation. And it could invalidate this entire downward move potentially right now. We'll see how it plays out. So we are moving into potential bullish. We need to see how this plays out. We don't quite have it yet because we don't have a high price breakout on a daily basis. But if we get a high price breakout today, which could happen if the market's closed right now for Bitcoin today, and that was our bar, then I would be changing this standout to bullish. That is a very clear bullish trigger right there, but can't do it yet because it's not the end of the day. Okay, so what are we looking at, guys? We're really looking at, this kind of rotation. We've got the inverted topping pattern for the SPY, and then we've got the nothing pattern in trending mode for gold. Gold is in bullish explosive mode. I think we're going to see a pretty solid rally phase for gold and silver today. So I think that's going to be very solid. And again, pay attention to the YM. The YM is silently crashing. It was down about 450 points yesterday, exactly 450 points. And it looks like today the YM is down 225 right now. Could be a really solid breakdown taking place. If we get below this 44,000 level on the Dow, then we could see a very solid breakdown move down to 42,000 very, very quickly. Okay, guys, that's it for now. Talk to you later.